Scene script. Ever wondered why some individuals shy away from loans in India despite their potential benefits? Well, it all comes down to a few prevalent misconceptions. Yes, we're talking about those stubborn myths that have been passed down through generations and have managed to create a sense of fear and confusion around the concept of loans. Today, we're here to debunk these myths and shed light on the true nature of loans. For starters, let's address the elephant in the room, the fear of high interest rates. Many people believe that all loans come with sky-high interest rates that are hard to keep up with. But here's the truth. Not all loans are created equal. Interest rates vary widely based on factors such as the type of loan, the lending institution, and your credit score. So, it's not a one-size-fits-all scenario. Next on our myth-busting agenda is the belief that loans are only for the rich. This myth can be traced back to the time when banks and financial institutions were less inclusive. But times have changed. Today, loans are accessible to everyone, regardless of their income level. There are a variety of loan products designed to cater to different financial needs. So, whether you're looking to buy a house, start a business, or pay for education, there's a loan out there for you. Lastly, let's tackle the myth that's been causing sleepless nights for many. The fear of the so-called debt trap. It's a widely held belief that taking a loan can lead you down a slippery slope into insurmountable debt. But here's the reality. Loans are merely financial tools. Like any tool, they can either help you or hurt you, depending on how you use them. If managed properly, loans can actually help you build wealth and achieve your financial goals. Loans are not a monster waiting to trap you. Instead, they can be a stepping stone to financial freedom when used wisely. So let's stop fearing loans and start understanding them. So, how does the loan system in India actually work? Great question. Let's dive right in. At the heart of the loan system are the banks and financial institutions. These entities act as intermediaries, channeling funds from those who save to those who need to borrow. This process is vital for the economy, enabling businesses to grow, homeowners to buy property, and students to pursue higher education. Now, how do you go about applying for a loan? The process is fairly straightforward, but it requires careful planning. First, you identify your need. Are you buying a house, starting a business, funding an education? Once your need is clear, you research the various loan options available to you. Different banks offer different interest rates and repayment terms, so it's crucial to shop around. Next comes the application process. This typically involves submitting financial documents such as proof of income, tax returns, and bank statements. The bank then evaluates your creditworthiness based on these documents and your credit score. Yes, your credit score, that 3-digit number that represents your credit history. The higher your score, the more likely you are to get approved for a loan. Once your loan is approved, you'll be presented with a loan agreement. This is a legally binding contract that outlines the terms of your loan, including the loan amount, interest rate, repayment schedule, and any penalties for late or missed payments. It's essential to read this document carefully and understand all the terms before you sign. If something isn't clear, don't hesitate to ask for clarification. After all, this is a commitment that can span years, even decades. But remember, a loan isn't free money. It's borrowed money that you're obligated to repay with interest. Understanding the loan system is crucial to ensure that you borrow responsibly and avoid falling into debt. And that, my friends, is a quick run-through of the loan system in India. It's a complex system, but with a bit of research and understanding, it can be a powerful tool to help you achieve your financial goals. A well-informed borrower is a safe borrower. Always understand the terms before you sign. Did you know that not all loans are created equal? Indeed, in the robust financial landscape of India, you'll find a myriad of loan types, each tailored to cater to specific needs and circumstances. Let's kick off with personal loans. As the name suggests, these loans are personal. They cater to your unique needs. Need to plan a wedding? Or perhaps you're thinking of a much-needed vacation? A personal loan can come to your rescue. They're typically unsecured, meaning you don't need collateral. However, they do come with higher interest rates given the risk lenders undertake. Next up, we have home loans. These are your go-to when you're ready to take the plunge and become a homeowner. With home loans, the property itself serves as collateral, and this security allows for lower interest rates. Yet, remember, defaulting could mean losing your home. Then we have education loans, a beacon of hope for those seeking to expand their knowledge horizons. These loans cover all education-related expenses, from tuition fees to living costs. While they are typically long-term and offer lower interest rates, repayment only starts once the education course is completed, which can be a relief for students. Car loans, too, have a significant presence in the market. They are usually secured loans where the car you purchase acts as collateral. The repayment period is shorter and the interest rates are reasonable. There's also the small business loans designed to fuel the dreams of budding entrepreneurs. These loans can help start a new business or expand an existing one. However, they often require a detailed business plan and sometimes collateral. Lastly, we have gold loans, where your gold ornaments or coins act as collateral. These are short-term loans with relatively low interest rates, ideal for immediate financial requirements. Each of these loans has its pros and cons. Their suitability depends on your financial condition, repayment capacity, and purpose. So, don't rush. Take your time to understand each one and choose wisely. Knowing the type of loan that suits your needs can help you make wise financial decisions. After all, it's your money, your future, and every decision counts. Borrowing money is not inherently bad, but irresponsible borrowing is. Delving into the world of loans, it's crucial to understand the concept of responsible borrowing. You see, loans are not your enemy. They can be a powerful ally in your financial journey, but only if used wisely and responsibly. The first pillar of responsible borrowing is borrowing only what you need. It's easy to be seduced by the prospect of more money, but remember that every rupee borrowed is a rupee that must be repaid, often with interest. So, before you sign on that dotted line, pause and ask yourself, do I really need this full amount? The next pillar is having a solid repayment plan. This is your roadmap to successfully navigating your loan. It's not enough to just think, I'll pay it back somehow. You need to know how you'll do it. Will you use your monthly income? Do you have savings set aside? Or perhaps you're expecting a windfall from an investment. Regardless of your method, a clear plan is your best defense against defaulting on your loan, a situation we all want to avoid. The final pillar, and perhaps the most important, is maintaining a good credit score. Your credit score is like your financial report card. It tells lenders how reliable you are when it comes to repaying loans. A good credit score can open doors to better interest rates and more favorable loan terms, so make it a habit to pay your debts on time, avoid borrowing more than you can handle, and keep a keen eye on your credit report. These three pillars, borrowing only what you need, having a repayment plan, and maintaining a good credit score, are the foundations of responsible borrowing. They ensure that you harness the power of loans for your benefit rather than falling into the trap of financial turmoil. Remember, loans are tools for financial growth, not instruments of financial destruction. Let's quickly recap what we've learned today. We started off by debunking the myths surrounding loans. We've seen that loans are not something to be feared or avoided, but rather a financial tool that, when used responsibly, can help us achieve our financial goals. A loan isn't a debt trap, but a bridge to opportunities. We then dived into understanding the loan system in India, shedding light on the fact that it's not as complex as it may seem. We learned about the role of credit scores, the importance of repayment history, and how interest rates are determined. We also explored the different factors that lenders consider when approving a loan, such as income stability and debt-to-income ratio. Next, we covered the different types of loans available in India. We talked about personal loans, home loans, education loans, and car loans, among others. Each of these loans serves a specific purpose, and understanding their unique features and terms can help us make informed decisions about which loan is right for our individual needs. We then moved on to the critical aspect of responsible borrowing. We emphasized the importance of borrowing within our means, making timely repayments, and maintaining a healthy credit score. We also highlighted the need to read and understand the terms and conditions of a loan agreement fully before signing on the dotted line. In summary, loans are not the villains they are often made out to be. Like any financial tool, they come with their pros and cons. The key to harnessing their potential lies in understanding them and using them responsibly. Remember, loans are not a burden when used wisely, but a means to fulfilling your dreams sooner. With the right knowledge and responsible habits, loans can be your stepping stone to achieving your financial goals. So don't fear loans, understand them,